Benedicte Mikolajczak, MEPS International's Southern European market analyst. It's great to have you back in the studio. In fact, not back in the studio. We did our last recording on Teams. So welcome to the Speaking of Steel studio, this time for a Marketing Minutes episode focused on Southern Europe's steel market. It's great to have you here. How are you doing?
I'm fine, thank you, and thanks for having me. It's nice to be in Sheffield.
Yeah, jetted in just to avoid the very hot weather. I understand it, but it's been quite warm here as well, hasn't it?
Yes, it's kind of nearly as warm as in Valencia, so no change here.
Well, anyway, in this episode, we're going to, as I say, focus on Southern Europe, drawing on some of the research that we've done in the ESR, and you're already, of course, speaking to contacts in the industry as well as we speak for the next edition. So, if we could start out by reflecting a little on supply in Southern Europe, clearly that market's heavily influenced by low-cost imports in particular. Have the revisions to the EU safeguard measures recently, have they done anything to address oversupply in the market?
Well, they have, because they have put further limits on imports by introducing those quota caps within the other country quotas that were already present for hot rolled coils, but are now also present for cold rolled and galvanized. And that has further limited imports. But that has not really prevented importers from importing. And as we continue to see quota that are getting full, and today is the 1st of July, and we will see again probably some quotas filling up very quickly on hot roll, galvanized, and maybe also cold roll. I'm thinking probably Turkey, for example, where there have been a lot of purchases from Turkey. And CBAM is another restriction which is making importers' lives even more difficult, because now they have to juggle anti-dumping, safeguards, and CBAM. And the window is starting to close, so people have been purchasing ahead of the application of CBAM, which is going to be the 1st of January 2026, even if the payment is delayed to 2027. But people have been importing for delivery October, or for delivery even November, for those countries who do not have a quota, for example, Indonesia. But the window is now closing. So it is really putting more and more restrictions, with importers see it as more difficulties into doing business and being able to buy from third countries.
A lot of things to juggle when you're purchasing, particularly from overseas. Has the domestic supply situation changed at all? Mills, I guess, are starting to cut their production as well.
Yes, I mean, mills have been cutting their production, but the problem is that the supply is plentiful, because we still have so much material waiting in ports, and service centers have months of stock still. And as we speak on the 1st of July, there is still a large amount of material that is going to start custom clearance, and material that is going to be dispatched. So even though the domestic mill are cutting capacity, the supply remains really plentiful, which might change with CBAM.
Absolutely. So, as we say, that window of opportunity to get those imports in is
Nearly
starting to close
closing.
now.
Yeah.
Yeah, and a very interesting time from that point of view. So, if we move on to sort of the demand side, which plays a crucial role in this oversupply scenario, I think a couple of the things that we hear about from Southern Europe are some large infrastructure projects, particularly energy, renewable energy. Are these things helping create demand for steel? Is the market any more buoyant than we're seeing in the rest of Europe, which is quite subdued, to say the least?
Well, Spain was still faring better up until May, mainly due to construction, but that seems to have gone. And Italy has been benefiting from the recovery fund, but that mainly affected. Yes, that was better for the construction industry, but generally, and this month in particular, I have started making phone calls, and I think the sentiment in June has worsened. The Spaniards have definitely become more negative, quite pessimistic, and the Italians have remained pessimistic. So I think we are in a context of extremely low demand and supply, which is plentiful, and the mills are reducing capacity and the imports. So our really only hope of the market stabilizing is CBAM reducing imports further, and importers are starting to start juggling again. So looking at countries with lower emissions, like Japan would have low emissions, Turkey, Egypt, but the problem is Japan has anti-dumping and safeguard quotas, Turkey as well. So it is a lot of juggling happening. Because, well, people still need to buy despite the low level of demand, but people are really trying to find the best possible deal they can.
Yeah, the loopholes, if they exist.
Yes, exactly.
And that's hard to establish, I guess, until we know exactly how much these CBAM taxes are going to cost.
That's the point. The benchmark, so the benchmark value has still not been published by the European Commission. So people are just estimating how much it's going to cost, and we're hearing 50 euros per ton. That could go up to 100. So we're not sure yet. And there have been speculative buying from traders ahead of CBAM to avoid the tax. But by and large, service centres have been buying very little from European mills and now from imports as the windows are closing. I think one thing that reveals that European mills are really taking very few orders is that their delivery times, which last month was July, August, when I spoke to contacts yesterday and this morning, their delivery times is still July, August. So that shows that their order books must be quite empty or not very full.
Absolutely. One of the things that really stood out from what you just said was that sentiment seems to be poorer than last month.
Yes.
It seems we've been saying that for a while. These calls must be really challenging at the moment.
They are. Yes, they are.
Yeah.
It's people find the situation very scary, and also there is the financial side, because the stocks that people have. So I mentioned that service centres in Southern Europe, especially in Italy, have quite high stocks, and the price of this stock is higher than what they can buy at the moment. And some are buying not because they have needs, but to lower the price of their stock.
Of course. So, I mean, if we can try and wrap up a little bit, and hopefully there's some encouragement in MEPS outlook, taking into account the things that we've spoken about already. What do we foresee happening in the remainder of the year in terms of sentiment, supply, demand, and prices, I guess? Have you got a view on that?
Yes, so I think throughout June, it's not a surprise, prices continue to decrease. So, I mean, we are not publishing our reference prices before the middle of next week, but I think we can safely say that prices will decrease again by probably the same amount as they decreased last month. And what can really change the price trend, I think, is CBAM, because at one point we said that the window for import is closing. So at some point, buyers will have to go back to European materials for their needs. The problem that our contacts have been telling us, buyers, is that the price of their resale material is just so low that even at current prices, which meaning that prices have continued to go down in June, but at current prices, they still can't buy. So they do expect prices to continue decreasing, so maybe into July. And that they might be, so the buyers are saying with current European price level, we still can't buy if we want to make a profit, which means that there might be further smaller decreases before prices reach bottom, and hopefully CBAM kicks in, and then the trend can change. And also there is an expectation that further protectionist measures will be introduced, and that could be another safeguard revision. Everybody's expecting Indonesia to have some protectionist measure, because at the moment it doesn't have a quota, and there have been a lot of purchases from Indonesia. So further on top of the CBAM, further protection is expected as early as the 1st of January 2026, and I think that is seen as the only thing that will make prices turn around, because people do not see real demand improve before the end of the year. The automotive sector in Southern Europe is still depressed, and the solar panels, the production of solar panels, which is quite big in Spain, it's all been delayed due to the uncertainty of the international situation.
Okay, well, trade defence, who would have thought it might be the crucial element in all this, and might help revive prices.
Absolutely.
At least, if not demand. Benedicte, thanks ever so much for your summary of the market. That's great, really drawing on the European Steel Review, and good luck with the research. I hope the conversations don't get too more difficult before the year's out.
Thank you very much.
Thanks for joining me.